Welcome to Alpha Recap. Thanks for joining us after the close. We're taking a look back at the day and the themes that matter heading into the long weekend. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Lots to unpack from the coverage. It was a day of concentrated tech strength and a lot of cross-sector divergence.
So, what really stands out here is that tech led the market, but it wasn't broad, right?
Exactly. Markets closed up with technology leading the gains, but that leadership was narrow. A few large names drove most of the momentum.
Give us the concrete examples people are talking about.
We saw technical buy flashes in a couple of headline names, Apple and Robinhood, which is the kind of signal algorithmic flows and institutional rebalancing can create. At the same time, several AI-adjacent small and mid-caps softened. So you've got index strength, but real divergence under the surface.
I mean, when you step back and look at this, it can look strong on the surface, but be brittle underneath.
Right, and the data backs that up. For every large cap flashing a buy signal, there were smaller AI names that pulled back on the day, which suggests profit-taking and headline sensitivity in that group.
Let's talk about some of the specific movers mentioned in the coverage. You flagged Netflix earlier.
Netflix traded at $77.63 and was down about 15.1% over 6 months, while the S&P 500 had an about 8.4% gain over the same period.
Not a great day for some consumer names.
No, that gap is meaningful. Analysts point to softer results, subscriber execution risk, and content spending as drivers of that underperformance. It's a reminder that when the market rotates into tech, some older growth stories can lag materially.
Short reaction. Banks had a split performance too. Walk us through that.
Independent Bank traded around $84.21 and was up about 12.9% over 6 months, while Western Alliance was about $81.50 and down about 6.7% over 6 months. That really highlights a bifurcation in the sector.
So, the take is that some community banks are holding up, while others face specific headwinds.
Exactly. Net interest margin dynamics, credit costs, and funding liquidity are playing out differently at the firm level. Analysts debated whether independent banks' outperformance is idiosyncratic or tied to broader macro support, while Western Alliance's weakness looks more company-specific after a softer quarter.
Quick reaction.
Right.
Energy was another big theme in the pieces. An interesting angle on ExxonMobil.
Yeah, that tracks. There was a detailed call arguing ExxonMobil could outpace the S&P 500 in the second half based on free cash flow generation and disciplined capital allocation, not just a crude price rally.
So the thesis separates commodity price moves from corporate cash flow and buyback decisions.
Right. The point is to evaluate operational leverage and return of capital policies. Analysts emphasize that cash flow and capital allocation can drive returns independently of where oil trades.
We also had a bunch of other price points listed in the coverage. Give listeners a quick snapshot.
Dynatrace was trading at $45.15, RTX around $198.71, BJ's at about $88.75, and Independent Bank and Western Alliance we already mentioned.
Okay, let's shift to catalysts. This is a big part of the story heading into July.
Right. Catalysts are front and center. Analysts flagged SpaceX post-initial public offering flows, the Sun Valley Conference, and several corporate earnings as potential headline drivers. Those events can create concentrated windows of volatility.
SpaceX post-IPO had some interesting chatter about congressional buys.
Honestly, I was a bit surprised by this one. The report noted the first reported congressional buys after the IPO, which increases scrutiny and can add liquidity and narrative momentum to secondary trading. With a big federal contractor like that, flows and disclosures matter a lot to price discovery.
Sun Valley is always a networking and deal flow focal point.
Right. And the other thing is that the conference can accelerate thematic rotations if sentiment shifts among big allocators. Combine that with earnings, PepsiCo and Western Alliance on July 16th were specifically flagged, and you get a pretty headline-heavy July.
Short reaction. Let's talk implications for different types of market participants.
For short-term momentum traders, the data suggested opportunities concentrated in large-cap tech signals, but with the caveat that smaller AI names can be erratic. Discipline on signal confirmation is key, and event windows should be watched closely.
And for long-term investors?
Long-term growth investors need to reassess fundamentals when a name like Netflix has underperformed. That means drilling into subscriber trends, content pipeline, and margin trajectory rather than reacting purely to price moves.
Income and defensive investors. What did the analysts say?
They noted the Exxon thesis is relevant to income-oriented portfolios because it centers on cash flow and capital allocation. But they also cautioned about commodity and policy risk that still affects the sector's macro backdrop.
Event-driven traders probably loved the calendar we just described.
Exactly. SpaceX flows, Sun Valley, and earnings like PepsiCo and Western Alliance create information asymmetry and intraday move potential, conditions event traders seek, but they also increase risk if you're not positioned for headline shocks.
So what are the strategic takeaways people should remember from today's coverage?
A few things. Confirm technical signals and don't extrapolate index strength without breadth and volume confirmation. Prioritize the catalyst calendar when sizing positions and model headline impacts. Separate commodity exposure from corporate cash flow analysis in energy names. And maintain position-level risk controls, position sizing, liquidity checks, and clear exit rules.
Right. And reconcile your time horizon with your tolerance for volatility. The same market can offer short-term technical entries and long-term valuation opportunities.
Exactly. It's about matching strategy to horizon and not getting whipsawed by noisy windows.
Quick fun one before we wrap. Any surprising headline you didn't expect today?
Honestly, the congressional buys post-SpaceX IPO were a curveball. That kind of regulatory and disclosure angle can really change narrative tone quickly.
Final short reactions.
Got it.
All right. To close out, give us 3 quick takeaways listeners should remember.
1. Tech led the market, but that leadership was narrow. Confirm breadth before assuming a broad rally. 2. July's catalyst calendar, SpaceX flows, Sun Valley, and earnings like PepsiCo and Western Alliance on July 16th creates asymmetric short-term risk. 3. Separate commodity moves from corporate cash flow narratives in energy, and always align position size with your time horizon and liquidity needs.
Solid. Quick reminder, this episode is for informational purposes only and not personalized investment advice. Analysts' notes and sentiment reflect market analysis and should be considered alongside your own due diligence.
Right. We're sharing analysis and data, not telling anyone to buy, sell, or hold anything.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening and enjoy the long weekend.